In this video, we're going to be doing an update on Coinbase because this is a stock that I have been long on for a couple of weeks. And I think there's a really high chance that as of right now, price is going to continue to break out into the beginning of next year, maybe even into April, as high as $500 to even $600. And I want to take this time right now to explain my thesis and why I still think that this can happen. Now, first and foremost, we're going to be taking a look at the monthly time frame for Coinbase. And if we look at the monthly time frame, what we're going to be focusing on is the BX trender at the bottom of your screen. Now, you can get access to this indicator and all of our indicators in our courses. Link is going to be down below under step 1. Now, our long-term BX strategy basically looks to go long when the BX trender is green. It looks to remove its long position when the BX trender turns red. And if we were to follow this over the past 4.5 years on Coinbase, we would have made a 114% return, which would have beat buy and hold, which is down about 10%. We would have 3 positions over that 4.5 years. We'd have a 67% win rate, an average win of 88%, and an average loss of 23%, giving us a risk versus reward of 3.38. So the first thing to understand here is that this is a longer term setup, and that if this is going to actually break out, it's normally going to last about 6 to 8 months. Now, as you can see, basically once this BX trender turns green, it will look to open a position at the start of the next candle. So what's currently happening on this candle does not matter. What we care about is confirmed candle closure and confirmed information. So you'll see that when it actually ends up turning green here on March 2023, it doesn't open in the middle of the month. It waits till the next candle open to confirm that it actually closed and then enters there. Same thing for an exit. We get the close on August 2024, and then September 1st, it will exit the position. In this case, it took 176% profit. Then here we get another entry. Stock does not rally, sells off, and we take a 23% loss. Now, what's currently setting up in the market is basically the same exact setup. And one of two things is going to happen, right? Either we're going to get a massive, extensive 100+% breakout, or this is going to reject like it did last time. Now, most of you are probably saying, no shit, Sherlock, it's either going to go up or it's going to go down. That's not the point, right? The point when we are analyzing the market and when we are trading a strategy is not to even care if it's going to go up or if it's going to go down, but how much are we willing to risk in order to figure that out? In this case, if this were to continue to sell off from right now at about $311, by the time the BX closes red, we'd probably lose about 20%, which really is not bad at all. And if this were to break out as we are expecting, that would be anywhere between a 100% move in the next 6 to 12 months up to a 140% move within the next 6 to 12 months. Meaning that we're going to have a risk versus reward anywhere between 7 to 1 to worst case about 4 to 1. And I will take that each and every single time. And if you see here, even though the BX is looking a little bit weak right now, it's still green and price is compressing within bullish structure. Now, what I like to do from this point is move into a smaller time frame. We already understand that the monthly is showing a strong BX trender, which you can see down here. I'm putting the monthly BX trender over the weekly time frame. And you will notice even clearly on this time frame that we have a bullish compression. So compressions basically happen when price is either sitting sideways or pulling back into a support level. So this here, this big breakout that happened here, this is considered an expansion. This massive sell-off is considered a capitulation. And then these sideways movements are considered compressions. In most cases, when the BX trender is green on the monthly time frame and price is compressing the way that it is right now, it's normally an indication that we are going to get an expansion pretty soon. And so that's why I'm still bullish at the idea of price bouncing here between $300 to $290 and breaking out in the next couple of months. Something else to take into account is the weekly market bias. You can see that price is pulling back into this market bias, which tends to normally be a solid support level. Now, there are times where we will break it momentarily and then bounce, but in most cases, when we're trading under the bias, it means we are bearish. When we're trading over the bias, it means that we are bullish. And so when we take all of this into account, I am still very bullish on Coinbase. And once again, it does not mean that it has to bounce. It does not mean that we even have to make money on this. I don't care if we don't make money on this. My goal is just to take a trade when it is actually showing criteria for entry. And then if it works out, great. If it doesn't work out, oh well. So in the case of Coinbase, I am still bullish until the monthly BX trender, which would happen at the end of November, closes red. And I think that right now, this is a really good dip buy opportunity in the meantime.